Here we will be learning about the debtors aging report. So debtors aging report is a report of outstanding debtors on a particular day, showing the age-wise analysis of the amount due from the debtors. That means for a particular debtor, say if 10 bills are outstanding, okay, for 10 bills we have not received the payment. So in debtors report, we will have that total amount of 10 bills and bifurcation of those 10 bills, okay, on a particular day, and which will show age-wise analysis of each and every bill. That is, if the bill is pending for 0 to 30 days, 30 to 60 days, or whatever. Okay, so this report is used to analyze individual debtors and also for calculating provision for bad and doubtful debts. Now this is a typical format of the aging report of the debtors. Okay, you have name of the debtors, and then age-wise breakup of the outstanding amount from the debtors, that is 0 to 30 days, 30 to 60 days, 60 to 90, 90 to 120, 120 to 180, 180 to 360, and above 360, and then the total amount due from the debtor. Now this is a standard format. Okay, you can make the changes as per your business requirements in the report. Okay, now let's see one example, and then let's see how to calculate a debtors aging report. So this is the example. Following are the transaction in the individual subledger account. Prepare the debtors aging report as on 31st March 2016. Okay, so you have details of two debtors, that is A's account is given and B's account is given. We need to prepare a debtors aging report. Okay, usually practically what happens is nowadays all the books of accounts are maintained are all computerized. Okay, so this debtors aging report is usually computerized, and it's calculated automatically as on a particular date. Okay, but let's see how the system calculates debtors aging report. Now first, A's account. Now if you see the A's account, there is a balance brought down which is pending from 1/1/2015. Okay, invoice number is 00256. Then on the debit side you have sales, okay, 4 sales, and you have 4 invoice numbers. Then on the credit side you have bank account, one entry for by bank account for invoice number 056 and amount is 25,000. So what happens is this invoice gets knocked off with this bank account. Correct? Since the payment is received, it is no more outstanding. Now this amount of 1,05,000, which is a balance, it includes what all amounts? 10,000, 15,000, 30,000 and 50,000. Okay, now for all these 4 amounts, see what is the date. Okay, now 10,000 is pending from 1st Jan 2015. Okay, so 1st Jan 2015, so we will calculate the number of days. Okay, we have to prepare the report as on 31st March 2016. The amount is due from 1st Jan 2015. So let's see how many days it is. See, from 1st April 2016 to 31st March 2016, it's already more than 360 days. So it will come in this slab, that is above 360 days. Okay, so this amount is due for greater than 360 days. Then the next one, 21st May 2015, and amount is how much? 15,000. So let's calculate this for how many days. Okay, so if you see this is due from 21st May 2015. So 21st May to 31st May, that is 10 days of May. Then subsequently you need to add May, June, 30 days of June, then July 31 days, August 31 days, and so on till 31st March 2016. Okay, so that comes to 314 days. Okay, next is 1st November 2015, invoice number 100 and amount is 30. So let's calculate. It has 30 days of November, then 31 days of December, then Jan 31 days, Feb 28 days, Feb 29 days since it's a leap year, and 31st March 2016 31 days of March. It will be 152 days. Okay, then the next is 1st March 2016, so it is hardly due for some 30 days, correct, or you can say 31 days as on 1st March 2016. So now this needs to be incorporated in your report. So let's go here. Okay, what is the name of debtor? Name of debtor is A. Okay, so 0 to 30 days, is there anything in 0 to 30 days? Nothing. Then 30 to 60 days, you have one amount which is pending for 31 days, that is 50,000. So 50,000 will come here. Okay, 50,000. 60 to 90 days, 60 to 90 days, you have anything? Nothing. Then 90 to 120 days, 90 to 120 days, do you have anything? Nothing. Then 120 to 180 days, 120 to 180 days, you have invoice number 100 of 30,000. So 120 to 180 days, invoice number 100 of how much? 30,000. So here 30,000. Then 180 to 360 days, you have one invoice of 15,000. So 15,000. Then above 360 days, so above 360 days, you have one invoice of 10,000. Now if you total all this, it comes to 50,000 plus 30,000, that is 80,000. 80,000 plus 15,000, so that is 95,000. 95,000 plus 10,000 is 1,05,000. Now this should match with your total amount due, or what is the balance carried down as on 31st March 2016. Now let's go to the next example, that is Mr. B. Now let's go to the B's account. Okay, if you see the B's account, there is a balance brought down which is pending from 25/3/2015. Then you have sales, okay, on the debit side, and on credit side you have all the receipts against which the invoice number details are given. So this entry 25/4/2015 by bank account, this is for invoice number 00233. Okay, amount is 30,000. So 00233, this gets cancelled, so this gets knocked off. Then by bank account for invoice number 001 20,000, so this invoice number 001 amount is 20,000, so this also gets cancelled, this is no more outstanding. Then by bank account invoice number 0155, okay, 55,000, so this also gets cancelled. Okay, so now if you see, these three invoices are pending. Now let's calculate since how many days they are pending. Okay, first is 25th October 2015, so you have 6 days of October, then 30 days of November plus 31 days of December, then 31 days of Jan, 29 days of Feb, and 31 days of March. That makes it 159 days. Okay, 159 days. Then 1st Jan 2016, invoice number 111, it is pending from 1st Jan 2016, that is 31 days of Jan plus 29 days of Feb plus 31 days of March. So that makes it how much? That makes it 91 days. Then one invoice, that is 156, is pending from 28 March, so that is pending only for 4 days. Okay, so now we'll break it up. So 0 to 30, you have one invoice which is pending for 4 days, so 63,000. 30 to 60 days, there is nothing. Then 60 to 90 days also there is nothing. There is one invoice which is pending for 91 days. So 90 to 120 days you have 136,000. Then 120 to 180 days you have 110,000. Then 180 to 360 there's nothing, nil. Now if you calculate this 63,000, okay, 63,000 plus 36,000 will make it 99,000 plus 10,000 is 1,09,000. Now this should match with your balance which is outstanding as on 31st March 2016. So this is how you prepare a aging report. And nowadays, because of computerized accounting system, this aging report is automatically prepared as on any day. Okay, but important thing is that whenever you have receipts, they have to be tagged correctly to a proper invoice number, otherwise your aging report will go wrong. Okay, thank you. That's all about aging report.